Today we're going to be taking a look at my stock portfolio. It is currently sitting at $23,400. We're going to see the moves that I made earlier in the year, which stocks I sold, which ones I bought, and then what I plan to do for the rest of the year. Now, like most of the market, I am down 0.63% in the past week, which is about 150 bucks. This is due to the stock market dropping with fears of tariffs and all of this that was going to happen and the president was speaking about. So the whole market kind of dropped. But if we take a look at the year to date since the beginning of the year, we can see we're up about 1%. So things have settled a little bit. However, I did make some changes to my portfolio. Now, apart from this, two beautiful dividends that I'm getting this month, this was from my mid-cap ETF that I actually sold. We're going to get to that now. But one of my most recent sales is going to be the SCHD. I sold about 80 shares at $29. My average cost was around $26.80, $27, somewhere around there. And the reason for selling this is that I transferred this over to my Roth IRA. I'm going to keep investing in my individual brokerage at 2 individual stocks, and the ETFs I'm going to try to maintain to my Roth IRA. I still believe SCHD is a great ETF to invest in and diversify your portfolio a little bit. This was actually going up while the whole market was down, so this is definitely something I want to keep in my portfolios. Now, some of the recent buys that I've been making, as you can see, is going to be Bitcoin, only $10. I barely have any Bitcoin in my portfolio. I think it's less than 5% of my portfolio. I do want to increase my position, especially at this prices below 90,000. And then some more buys that I did make was I bought 1 share of Amazon at 228. I opened a small position in Netflix of 5 shares last week, and then due to the recent earnings, I bought 2 more shares at 82, giving me an average cost, I believe, of about $85, $87 on Netflix, which I'm very happy. If it keeps dropping, I plan to buy more. Keep in mind, guys, this is just my own personal opinion. I'm not telling you what to do. Again, more Amazon. And I also did my first put of the year, which I sold puts on Sulfite at $20, and it expires on January 30th. And I got a credit, as you can see down here, for $6. And then my new position on the portfolio, which I did a video recently. If you haven't check it out. It's going to be the last video on the channel before this one. I did open a position in MasterCard. I currently only own 2 shares of MasterCard. This is the second one that I bought at $500.30. And then the last thing I want to show you on this slide is another sale that I did on Novo Nordisk. I sold it at $60, 10 shares, and I have bought it at 48. So I made a nice return of about 20-25% there, which I was very happy with to start off the year, made some money, and then actually reinvested this back to MasterCard, which is what I wanted to do in the first place. So if you can see over here on the right hand side, let's get into all the stocks that I currently own and what I plan to do in the future and the stocks that are in my watch list. So first things first, like I mentioned before, I want to get rid of all ETFs. I currently have this Vanguard Growth ETF in my portfolio because I wanted to be exposed to the growth sector of the United States. As you can see, it's about 30% of my portfolio. It's not terrible. It's actually what I was aiming for and what I wanted to do. I only have 11 shares and I did buy one more when the market was dropping, so my average cost is $400.77. I think this is a little below value. I think when it gets to around the 490 area or somewhere around there, I'm gonna sell it and I'm gonna use this cash and disperse it into individual companies like probably Microsoft, Amazon, and MasterCard. And I also did a video like 2 or 3 videos ago about a perfect ETF portfolio. This was included on there. The Vanguard Growth ETF was included on there as well. This is the Bond Total Market ETF, which I actually plan to keep in this portfolio just because it gives me a little bit of exposure to the bond market. It doesn't really move a lot. It's not that volatile, and it's just cash sitting there earning interest, and it's only 8.19% of my portfolio. And then we also have the iShares 0 to 3 months treasury bond. This is just short-term bonds. So you can see I have an average cost of 150. I have a total of 30 shares, which is about 16% of my portfolio, and my market value is $3,000. Again, this is not something I plan on touching right now, as I do have cash in my individual account. The case happens that the market keeps dropping and I run out of cash. This is something I'm going to sell and use this cash to buy stocks. This barely even moves like a 0.10% per day. So I just have cash sitting there earning interest, which is something I want to have in my portfolio. And this is the cash that I was referring to. I have about $3,000, which is this is earning a 3.4% interest because I do have Robinhood Gold. And as you can see, so far this month, the interest I've acquired is about $9.17. And then next payday is going to be January 30th. My lifetime interest paid is about 198 bucks, which is a lot more than the $5 a month I'm paying for Robinhood Gold. Now, real quick, we just saw the soft pipe put is right here on the right hand side. I just showed you my BTC by Bitcoin. It's only 2.28% of my portfolio, and it has a total cost of only $400. This is something I'm just adding little by little. I'm not that interested in crypto, but if it goes down below the 90,000 mark, I believe it's a good buy, and it's not that much of a risk. So if I lose it, it it is what it is. Now, keep in mind, guys, this is another position in my portfolio. Most of the positions are going to be very low in shares because these are new positions that I believe are going to perform in the next 2, 3, 5 years. This is, again, my own personal opinion. So it's going to be Uber. My average cost at $84.11, and it's only 2.34% of my portfolio. Then we have the most hated stock in the stock market, PayPal. Yes, I do have PayPal in my portfolio. Only 5 shares. It's about 1.56% at an average cost of $61, and my total market value is $282. I plan to buy 5 more shares if this drops below the 50 mark, and then we'll see what happens from there. But I think PayPal might do a little bit this year, at least I'm hoping, just like every single investor has been hoping for the past freaking 20 years. Then the next stock on my portfolio, it's a new position as well. It's going to be Netflix. Like you can see, my average cost is $87.31. I only have 7 shares, which is about 3.30% of my portfolio, and the total market value is about $600. Another company that I plan to keep adding if it drops below the $80 mark. Then we have Comcast at an average cost of $28.69, which is about 6.39% of my portfolio, sitting at 40 shares. Comcast, if it gets to $30, I think I'm selling this. I had this in my portfolio for a little bit of exposure, not to the technology sector, just so that in case the market goes crazy, I had something there just giving me dividends and something that's not going to move a lot. But I mean, Comcast has been moving. I'm not going to lie. I'm not too sure if I'm going to keep it or not. I'll have to think about it once it gets to that $30 mark, but I might just keep it and just keep earning the dividends. Next up is a company that I wanted to own for the longest time. It's going to be Microsoft, and I still believe that I bought it at a high price. I should have bought it in the 440s when it dropped, but I just didn't want to go too crazy on this. It's currently 12.38% of my portfolio. I own about 5 shares, and my total market value is about $2,245. If this keeps dropping below the 440 mark, 430 mark, I think I'm going to add more shares to it, but we'll have to wait and see. Next up is going to be Amazon. It's going to be about 6 shares in my portfolio with a total percentage of 7.74 and at an average cost of $224. Again, another company below the 230, 220 mark that I'm going to add more. And we're back at it again with Adobe, guys. My average cost is $303, which is 2 shares, and it's about 3.24% of my portfolio. Adobe before 300, I believe, is a buy. I know this stock gets hated a lot in the stock market due to AI, but the financials are there, the fundamentals are there, and I can only invest based on that, not in speculation. At least that's how I like to invest. So we'll just have to wait and see what happens. It's a small position. If I lose it, I lose it. But if this goes below like 280, 270, I think I'm going to start opening a proper position, maybe around 10 shares. I know that's kind of funny, a proper position, only 10 shares, but keep in mind the size of my portfolio. So for me, it's going to be a significant amount. And then this, I mean, I don't even know why I'm showing you guys this. QFin Holdings is a Chinese company that I made a huge mistake. I got burned buying Chinese companies. It happens. My average cost is $43. I own a total of 10 shares, which is 0.90% of my portfolio, and my market value is about $162. As you can see, I'm losing about $274. This is paying me a dividend. I don't plan on selling it. Again, the fundamentals are there. I know I just said that about Adobe, and then look at me losing money here, but this is just due to the politics as well. I'm just going to keep it. It's giving me dividends. I'm going to try to get the most dividends as possible before this. I don't know if it's going to go bankrupt or what's going to happen, but it's just going to stay there for now. And then the last stock on my portfolio, which is also a new position, is going to be MasterCard. I have 2 shares, which is about 5.83% of my portfolio at an average cost of $434. If this drops below the 520, 515 mark, I plan to buy more shares, and I definitely want to increase this position. I think this is a huge company. It's a great company. It has beautiful fundamentals. It's in pair with the competition like Visa and American Express. So if it drops in price, I think I'm going to buy a little bit more. Then real quick, guys, if you take a look on the right hand side down here, I have only 4 stocks in my watch. This is going to be Visa, Meta, JP Morgan Chase, and SoFi. The only one I'm really interested in buying is Meta. I was waiting for it to drop below the 600 mark, and I kind of missed it. I think right now it's not a terrible price, but I don't really want to buy it here. It's not really a company that I'm eager to invest in. So it definitely, if it drops below the 600 mark, I'm going to open a position. But for now, it's going to stay like this. And then I think Visa and JP Morgan be below 300. JP Morgan especially below the 290. I think is something I can entertain. And SoFi, I'm just selling puts right now. But if it goes to $20, I do plan on buying the company. I don't see it there, however, but let's just see if anything crazy happens. And then if we take a look at the overall history of the portfolio, I am up 34.22%, which is about almost $6,000. I'm very happy with this. I'm going to continue to do what I've been doing. I know you should invest for the long term, but if you can take profit, especially for example on the NVO position that I had, I was already up 25%. That's more than enough for me. And this is pretty much the total breakdown of my portfolio. It's going to be about 75% in stocks, only almost 2% in cryptocurrency, and the rest in cash. I do have a lot of cash, or what I consider to be a lot of cash right now, just getting ready if anything happens to buy more stocks. So that's about it for the video, guys. I appreciate you watching. If you enjoyed it, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you in the next video.